I have been working on climate change and policy responses to climate change for well over a decade now in a number of different roles. And my current position is as a legislator in the House of Lords in the UK with the opposition party. The reason I was put into the House of Lords as an appointee was because I was involved in the drafting of the UK's Climate Change Act, which was the first piece of legislation to be passed that committed the country to significant cuts in gases by 2050, an 80% reduction on 1990 baseline. It was legislated for and has become now the guiding legislation in the UK for addressing climate change. For drafting that legislation, which we were doing in about 2006, we had just come through a period when climate change started to become noticed by mainstream politicians. And we're very fortunate that we had a high degree of cross-party consensus that this was an issue that needed to be addressed by legislators. And we had, at that point, not yet had the disappointment of the UN talks not succeeding. So the mood was very positive that this was something that could be tackled. And we felt that it was important for the UK to take a leadership role and demonstrate leadership by legislating. And of course, there were arguments for and against during that period. Not least was the argument that why would the UK act unilaterally on a global topic like climate change? We couldn't, just for our own emissions, guarantee that we would have any impact on the global problem. And the argument we put at the time, which was the argument that carried the day, was that this was all about leadership. And that by showing that we intended to tackle this problem and to decarbonise our economy, we would hopefully send a signal to other countries that this was both possible and necessary. And I'm pleased to say that in 2008, that piece of legislation made it onto the statute books and has since then been governing how we approach the management down of our emissions from all sources across the economy. Now, the UK is only, as you know, one member state amongst 28 European members of the European Union. And when it comes to international climate change action, we rely on the EU to do our negotiations for us. So we are, as the UK, an active member within the EU to ensure that the EU is also adopting ambitious targets and playing its part in achieving a global deal. And here we are now in 2015, when we are very much hoping that we will see a deal in Paris that reinstates a global framework for tackling climate change. We think that that framework will look quite different to the Kyoto Protocol, that it will succeed, in that it will, for the first time, be inclusive of many of the major emitters of greenhouse gases. So for the first time, we hope we will have an agreement that includes both the US and China, alongside the EU, in taking on commitments to reduce greenhouse gases and tackle climate change. Now, the EU itself has already signed up to a 30% reduction a 40% reduction in greenhouse gas emissions by 2030. That's a moderately challenging target for the EU. We have a whole host of policies that have already been introduced into the EU to help us reduce our emissions, and many of those are starting to make an impact now on quite a significant scale. The primary one amongst them is the EU's emissions trading scheme, or the ETS as it's known, which is a cap and trade system. It applies to half of the EU's point source emissions, so all the big polluters, the power stations and the heavy industry sectors. And it creates a legally binding cap on all of those installations, and that cap steadily reduces over time, so that there's an increasing signal to those polluters to reduce their emissions. Now, it is cap and trade, so it is inherently flexible. It allows participants to over-deliver and then trade their surpluses with people who are finding it harder to reduce their emissions. And also, when it was set up, it had an element of offsetting, so you could bring abatement that was generated outside the EU into the EU to count towards targets. Now, it's not been a completely plain sailing as far as that policy is concerned. There have been some issues, not least the fact that the EU's emissions are now falling very fast. We saw data come out just recently that showed a 4% fall in emissions just from last year. In 1 year, a 4% across the economy drop, and that will create a surplus in the carbon market because our caps are only falling at 1.74%. So we have the reality in Europe is that we are decarbonising faster than was anticipated, and the caps will need to be changed to take account of that new reality, and that will be a political discussion over the next 12 months where politicians will hopefully agree to tightening those caps to keep the pace with what's actually happening. And what is actually happening is quite exciting because we're seeing a whole host of investment now into cleaner technologies. Primary amongst those, for many European countries, are renewables. I'm sure many of you will have heard of the German experiment known as the Energiewende, which is a wholesale shift away from fossil fuels and nuclear towards renewables and energy efficiency. They are going through their process of adjustment. This is a big change in their policy. The UK also has been shifting similarly away from fossil fuels, but we have a slightly different approach to the Germans in that we also include nuclear in our list of technologies that we want to support. We include carbon capture and storage to allow us to use fossil fuels for longer if we can capture and store the carbon. And we have also backed renewables, but not the same renewables necessarily. We have much more of an emphasis on offshore wind and some of the marine renewables, as you'd expect, being an island, whereas Germany's doing it largely through biomass and solar and then wind, onshore wind. So different states are taking different approaches, and one of the strengths of that approach, I think, is that as individual member states pursue policies that suit their own circumstances, we will test out different mechanisms of doing this. It will be very interesting to see if the UK, by having a kind of all of the above policy for reduction, will find it as easy or harder than Germany, who have selected a much narrower band of technologies to support. So there's quite a high degree of change going on in Europe. I should say that not all countries have the ability or indeed the desire to go as fast as Germany and the UK. We have some countries who are still very reliant on coal, and certainly in those eastern countries who are newly arrived into the EU, they are going to take a little bit longer to adjust to this, to the desire to move away from carbon in our energy systems. And the European climate change policies are designed to be sensitive to that. And particularly the climate change, the carbon market has within it redistributive mechanisms that enable richer countries to support poorer countries or countries who are finding it harder to adapt. So we have solidarity measures, which mean that allowances that are created under the cap and trade market are given to the countries who are finding it harder as a mark of solidarity, so that we can help to redistribute the effort, and those that can go faster and further can do so, and those who are finding it harder can be helped through the process. So politically, carbon markets are, I think, very useful, both because they enable you to take a flexible approach and because they're a very efficient policy. So no group of civil servants has to sit down and work out precisely how to deliver our targets. That's down to the market, and the market is very efficient at uncovering least cost solutions. So for that reason, Europe finds it, and indeed the participants support this approach. And as I said, it has these flexibility elements which allow for quite tailored policy. So you can help to spread the effort in ways that help to solve some of the political problems that you might otherwise encounter. And amongst those as well, I would also just mention offsetting, which is a feature of carbon markets that has had some criticism, but it's definitely true that if you have a market, if you can create a gateway into abatement from other countries where it might be cheaper, you can then have a very strong price control mechanism that stops your market from delivering very high prices. But I have to say that in the EU at the moment, high prices is definitely not our problem. Our problem is low prices and trying to increase the price signal that is being felt at the moment in order to continue to drive investment. If I end my testimony there, hopefully people will be able to tell me a couple of things that you wanted to hear. And if you have questions, I'm not sure of the form, but if that's possible, I'm happy to take those.
Thank you, members. Do we have any questions? Baroness, I have just a couple questions. There are always concerns, and we will likely hear testimony today, that adopting a carbon market will be bad for the economy. Now, I will preface your answer by saying that not only have I studied them in the UK, but also in British Columbia, in Alberta, where they have the longest-serving conservative government in all of North America, and the CEOs in Alberta were the ones who pushed for a carbon tax as opposed to a cap and trade system. And so there are a couple of different models out there. So can you talk about, A, whether it's hurt your economy, and then B, the benefits of a carbon tax versus a cap and trade model?
Oh, I'd be happy to do that. In terms of whether it hurts our economy, there's absolutely no example, I think, that we can point to that shows that the ETS specifically has driven a problem with our economy. We have to kind of bear in mind that the UK has, just like the rest of Europe, and indeed I'm sure it had an impact on the United States, gone through a financial crisis which caused a lot of slowing up of financing of investment into industrial sectors. I mean, had a big, we went into recession, so we lost growth in our economy for a reason outside of our actions on climate change. And what's been interesting about the carbon market has been that because it's so responsive to external factors, is that the minute that the economy started to slow, the caps then became much more lenient, because as the economy slowed, emissions fell, and this price signal reduced. And that's one of the features of a trading system that is strong. You didn't require politicians to intervene. Simply the way that the mechanism was set up reduced the pressure, the prices fell, and that reduced the pressure on industry. So it is a very responsive mechanism. Now, what's happened since the recession is that we've seen a slow return to growth. It's still not reaching the level we anticipated before the financial crash, but we are seeing growth returning. Growth that's green. So we're not seeing a complete rebound to the highly emitting scenarios we had pre-crash. We're seeing investment now into cleaner technologies and growth in services. We've all had a strong services sector in the EU, but it's increasingly we're seeing that value added is coming from less polluting investments. And so far from being a danger to our economy, it's actually the EU is now seen as a destination for international finance into clean energy technologies. So there's quite a lot of literature been written about how the green economy is helping us to recover. And I mean, the fact we have in the UK now a positive balance of trade with China on environmental goods and services is really celebrated, because there are very few things we can compete with China on. And it just so happens that on environmental goods and services, we have a positive balance of trade. So the idea that environmental regulations must damage your economy is not correct. The other thing I just add on is that we have, I think it's fair to say, there's an obvious it risk with anything to do with in bringing in an externality that wasn't already there. But that's because they're in ways that just don't show up on the balance sheet. So we have air quality issues. We've had air quality issues over the years. And as we clamp down on fossil fuels, such as coal, we also see benefits in terms of air quality, and that helps reduce pressure on the public purse in other ways. So cost-benefit analysis of taking action on climate change is complicated, but there are many co-benefits that we see coming down the track that will come from moving to a cleaner system. And those will be particularly noticeable, I think, once we move to electrification of transport and the cleaning of the air in our cities, which are largely to do with pollution coming from vehicles. On the whether a tax is a better system, there are opponents in both camps. I'm a pragmatist, and I like cap and trade because it exists already, and because it's such a potentially powerful tool. If we are not able to have harmonised taxation policy in the EU, it's simply not possible. So for the EU, it wasn't really an option, and so I think this was the best way forward for us in terms of having a harmonised, clear message that's the same message across the whole of the European Union. There are some benefits to taxation, but equally I've seen here in the UK we've tried to use taxation on vehicle fuels to change the carbon intensity of our travel. But those kinds of fiscal interventions that are usually brought in by politicians full of hope and expectation that they'll be on an escalator, so we'll see steadily rising prices, have been really shown to be very vulnerable to political intervention. So we see taxes introduced, and then, if they've been set up, then they're frozen or even sometimes put into reverse because taxes are not popular. They're not vote winners, and it's something that becomes very vulnerable to a lot of lobbying. So, in theory, a tax that's steadily rising will be as efficient as a carbon market with a steadily decreasing cap. But in practice, the politics does have an impact. And the market, as far as I've seen it, it's not immune to political intervention, but you create new stakeholders when you create a market. People who are then in the financial world, analysts, a whole breed of other people become involved, and that helps to level up the lobbying space so that you have more advocates who are the winners in the system, helping to preserve your policy. I just want to also just say that something that we do in the UK is look to your trading schemes that are already established, both the West Coast Initiative and the REGI system, and we see good elements, very good design elements in those systems. And part of the challenge now in the EU is for us to try and move actually closer to some of the features that you've already tested out in some of your markets in the States. So, and that will take us probably closer to a market which has elements of tax in it. So there are cap and collars on the price. So I think this is a space in which there's plenty of scope for flexibility, and a well-designed carbon market can be every bit as effective as a tax, in my view.
Thank you, Baroness. Members, any further questions? We appreciate your testimony today. I apologize for the technical difficulties, but your testimony was very valuable to the committee, and I hope to see you soon, either stateside or across the pond in the UK.